Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Looks like it could be a pretty interesting close to the year for equities out there. Obviously, a lot of talk about this US tax bill. It appears to be getting very close now to getting across the line, and it's just going to be interesting now to see how much money that pushes into the US economy. And a lot of debate on the actual impact of it. Certainly, it probably appears to be more sort of short term rather than longer term. For the next couple of years, it does give a pretty good boost, but after that, it starts to taper off. It's just a question of how much money you can sort of really push into the US economy. Certainly for some of these big corporates, if they have got a lot of funds offshore and they bring that back at quite a reduced tax rate, then certainly there could be quite a bit of money pumped into the US economy. That can be quite interesting because you've got the Fed moving forward with their rate increasing policy. We saw the further hike in December. That was pretty much signposted, and now it's going to be very interesting to see how it plays out into 2018. At present, we're still looking for 3 more rate hikes in 2018. Also, it's going to be quite interesting to see the composition of the Fed. Obviously, we've got a new Fed chair, but also as well, you've got 4 new voting members and 2 new bank presidents coming on board in 2018. So certainly the composition of the Fed is going to be dramatically different from what it has been over the last couple of years. The talk coming out of the Fed as well, it's quite interesting. They're looking at potentially pushing unemployment down to around sort of 4%. That is extremely low. As well, looking for growth to be around sort of 2.5. It's going to be interesting to see how that sort of plays through, so especially if you get this extra sort of short-term boost coming from the tax bill. Quite interesting as well coming out of Europe as well. ECB looking for increased growth going forward in the Eurozone, marking some of those growth targets up by around sort of 0.5% over 2018 and 2019. Brexit's still dragging on. Theresa May seems to be making a little bit of progress, but then suffered a little bit of a body blow with the vote last week. Where Parliament will now have to ratify the final Brexit bill from the UK. Still holding in, sort of holding around those sort of high 50s, low sort of 60s. It's just going to be interesting to see how that plays through now the Northern Hemisphere winter. New Zealand economy here will finish the year on a pretty good rate, and it's going to be interesting to see how it sort of plays through. New government's got quite a few policies coming through. The sort of mini budget appears to be okay for the next sort of 12 months, but then it's going to be interesting to see how it sort of plays through sort of 18, 24 months down the road. So I'd just like to take this opportunity to wish everyone a very Merry Christmas and a Happy New Year from Bay Financial Partners. We look forward to speaking to you in the new year.